In order to understand where you're going, you have to know where you've been. So we have to understand what Friday's price action showed us. So we had this big falling wedge on the overall market. This is on the 2-hour time frame, and this was targeting about a 14-point move up. We got this breakout here. It got a big rejection off of this previous strong support line of this much bigger rising wedge pattern. I previously thought that this was going to come all the way down to about 530, 531, and then get the breakout, which actually still would have left price below this level. But we got this early breakout and still this big rejection. And now the question is this going to continue further up and break back above this previous support, now acting as resistance, or was this just a false breakout and we're going to continue heading lower? Technically speaking, price can continue pushing up underneath this previous support line before the bulls finally realize the trend is over. Although more rare, even a break above this previous support doesn't invalidate the whole pattern so long as this resistance isn't broken above convincingly. This rising wedge pattern on the VIX was showing us that volatility was likely to start getting crushed, and we so far have broken below that support line of that rising wedge, and this is what this is targeting if this continues on down, about 13 for the VIX. And what's going on the Dixie, the dollar strength index, just keeps morphing. We had this falling wedge pattern here, which this was the breakout target for it, but we kind of broke out but didn't really reach it. And it's looking now like this could be an inverted head and shoulders pattern, but we're definitely consolidating. If we could break above this and this is a valid pattern, that would mean that the dollar is targeting around 105.50. So when we take a look at things that were going on intraday, we can see we had much increased volatility. And there are a lot of things that happened that coincided with things that were either going on the Dixie or on the VIX. We take a look here right around 1020, we can see we had this big rejection here, and this was looking like it was forming kind of a megaphone pattern because of the increase in volatility. But let's see what was going on with the dollar that coincided with this big spike down. As you can see here on the dollar on the 5-minute, we had what looked to be like a falling wedge pattern. We kept trying to break out and couldn't get above there. And like, this is not an accusation, but I still kind of wonder if this could have been Japan intervening here again. And we won't know until that comes out. We may never know. But this was the pattern target for the breakout. And remember, like I've said before, wherever things break out from, that pattern target kind of follows along with it. So we got all the way down here to this support level, broke out, and as you can see, we basically fulfilled that pattern target all the way up there. And then you can see right about 10:30, 10:35, the market got bullish again and started pushing up, and you can actually find on the VIX where that happened. So right at this point, the VIX had broken down below that rising wedge pattern. It came back up, retested and rejected right at 10:35, and that coincided with the bullish price action on SPY at that time. And then we can see down here we had this big spike in the VIX right when it hit this main support line. And something that I say all the time is there's a reason why I drag out and extend out my support and resistance lines, is because you never know when they're going to hit and react, and that's exactly what happened here. And then we can see once the market finally got up and it touched this previous support line of this huge rising wedge pattern, it obviously acted as resistance here, a strong resistance. We had this massive sell-off, and even that coincided with the VIX. And one of the things that happened a little bit later in the day, in the second half of the day, is we had what appeared to be a very clear falling wedge pattern forming on SPY, and we were expecting that to break out. We got a breakout. It was a false breakout. We broke out again, rejected again, and I think this is showing something so important. This is showing that bullish patterns are not breaking out as they were before, and it's even more confluence the fact that we had this big falling wedge pattern here and we couldn't break out. Now this could just be an initial attempt and maybe we'll get back above it, but if we don't, that means more red for the markets. And if we just really quickly take a look at the futures, we can see this is that same big support line of the rising wedge pattern on the futures. We actually did break above that, and then up here is where we hit that support line, now acting as resistance on SPY. So it kind of shows that this previous support line here, it doesn't seem to be as significant as the one on SPY. And very quickly, I just want to show you a little pattern that showed up on the advanced decline. And this is why it's so important to follow this, because this actually broke out on SPY. So we had like what would be considered an ascending triangle pattern here, which you expect to break to the downside typically. It took a little bit before we got the rejection, but we finally did. And you can see this happened right around 10:15, and it lasted until about 10:40, 10:30 to 10:40, depending on which way you look at this. And so if we look at what was going on with SPY, we got a little bit of a sell-off here and then a big bullish impulse to the upside, which I suspect that was probably the Mag 7 dragging the whole market up. But then you can see right around 10:30, they couldn't do it anymore. And since the whole rest of the market was already selling off, the whole SPY started selling off all the way up until about 10:35. So where do we go from here? If we're looking on the daily, we're below the 10 and the 21 daily moving averages, but we're above the 200 and the 50. We've got earnings coming out like McDonald's on Monday, Microsoft and Procter & Gamble on Tuesday, Meta on Wednesday, Apple, Amazon, and Intel on Thursday, and some of the big oil and gas names like ExxonMobil and Chevron on Friday, just to name a few. We quickly take a look at the investing.com economic calendar. We've got so many key catalysts coming out in addition to earnings. You've got consumer confidence, the JOLTS job openings. Even the Bank of Japan interest rate decision is going to be very important because it's going to affect the dollar. You can take a screenshot of this if you want. One of the biggest things is our FOMC statement. They're coming out with the interest rate decision. They're going to let us know whether they're keeping rates the same, whether they're going to raise them, which is very, very unlikely, or whether they're going to lower them, and then they're going to give some guidance on what could be happening going forward. If you think the markets are headed up from here, please tap that like button. But if you think they're headed down, please leave a comment with your thesis below. We're about to go over the requested tickers, but before we do, please remember to tap that subscribe and notification bell if you love content like this and want more of it. The first ticker we're going to look at is ASNS. You can see all of your key levels here, the all-time high, the all-time low, main support and resistance lines. We're currently above the 10, the 21, and the 50-week moving averages, which is a bullish sign, but we're below the 100-week moving average. If you take a look at the daily, we're actually above all of the longer running moving averages, and we're below the 10 and the 21 moving averages. So if they could break above this, that could be a very bullish sign. And if you're interested in how I actually determined all of these key levels, I went over that in my last video, which I link above. So when we zoom all the way into the 2-hour time frame, you can see that there's a pretty well-defined symmetrical triangle pattern here. And we've got our pattern targets to the upside and to the downside. If this breaks to the upside, it's targeting around $4.30 per share. And that would make sense because it actually would be coming up into this main supply zone. But if we come to the downside, you have to zoom all the way out on the 4-hour time frame to see what that pattern target is. And that would be targeting about 20 cents a share, which is not what the bulls want. And I can say that on the weekly time frame, although it's not confirmed yet, what we could be forming here is a bit of a basing pattern on the RSI, which if that does happen, we actually would expect this symmetrical triangle to break to the upside. But there's really no way to know until it actually breaks. And remember, with symmetrical triangles, you can often have a false breakout in one direction, followed by the real move in the other direction. Now, our next and final requested ticker is MAXN. We've got our all-time high up here, all-time low down here, and multiple main support and resistance lines. You can see once we reject it off of this $4 level and just smashed all the way down to, what is that, about 16, 17 cents, there's hardly any support for this in between that level. And so there's actually a very similar pattern on an intraday basis. This is on the 2-hour time frame. Another symmetrical triangle pattern. This is targeting around 40 cents to the upside. But if it's going all the way down, I mean, this actually won't even go all the way down. This is basically targeting bankruptcy if it were to actually break below this main support level. This is where the buyers really stepped up. If it broke below this and they weren't stepping up anymore, it would not be good for this company. And if we look at this again on the daily, we're below every moving average. What I see on the RSI looks kind of like bullish divergence based on the slope of it, but this is not even the kind of pattern I would look for to go long. I would almost make the assumption that this actually is going to finally break below this support line. but I could be wrong. If it comes down here and the buyers really step up, I think that we could probably see this move up to about 40 cents a share. As always, nothing I show is financial advice, and on that note, we have today's trading rule to live by.